After half a decade of trading and analyzing stocks, I've never seen a pattern quite like what's happening in NVIDIA right now. Everyone is excited because this is the biggest company and with all the AI hype. But there is something crucial that a lot of investors and traders are missing. But before we dive into NVIDIA's chart, I need to be clear. This analysis isn't about the AI hype or the mainstream headlines. What I'm about to show you comes from studying tens of thousands of chart patterns and price movements over the years. But before we get into the rest of the video, our Profit Punch newsletter subscribers recently caught SMCI's 240% move, NVIDIA's 180% move, and recently a 200% move on a portfolio, all from following the same technical patterns that I'm about to show you in this video. If you want to stay ahead of these major market moves and get real-time technical analysis, make sure to sign up for the newsletter where I share specific entry points and technical breakdowns before the big moves happen. Today we are going to look at NVIDIA's technical pattern that's revealing some fascinating signals about its potential next move. So if you're holding NVIDIA stock or you're thinking about buying, you'll want to pay close attention to what the charts are telling us. So here we have a weekly chart of NVIDIA. You want to always look at the weekly chart, which I have on the left, and then the daily chart is on the right. The daily chart is where we can trade from, and then we can know where to have specific entries. The weekly chart is where we should always be looking so that we can see the long-term picture. Before we get into all of that, the first thing we want to look at is NVIDIA's fundamentals. NVIDIA might be the best stock in the stock market right now, best on price and fundamentals. That's why it's a $3 trillion company. Return on equity, we always just want 17%. This Gujanga's monster has 90%. Revenue, we want to see an average of 40% in a super growth stock over the last 4 quarters. This thing is like, man, 40%? What are you saying? I got 100%. Earnings per share, we just want to see 30% over the last 4 quarters for a great company. This thing is like, come on, man. With all the AI hype, 30% is nothing. It's pretty much doing 10 times or even 20 times that. So this is a really good stock. So we can see earlier in the year, there was a 6-month base. This is something called a cap and handle. We can see it formed a 6 months base and then it broke out on very huge volume. I color code my bars. So whenever you see a green bar in my chart, just know that is a bar with very huge volume. And whenever you see huge volume like this, that means that there's a big whale out there putting their money in NVIDIA. So we always want to see these green bars on the weekly chart. I then told people in the newsletter, hey guys, please get in. So if you had held through all of this, this would be about a 200% move, not just 100. So investors, of course, can get this 190%. Traders are likely not to get this 190% because they have to get in and out of their positions, but they cover up with it by using bigger positions so that they can get very similar returns. So it did move, it formed a base here. This was still a good time to get in, and then we can see it form another consolidation. But then there's something about this consolidation that is interesting to look at. Another reason why NVIDIA was the best company in the semiconductor industry is that when we add other semiconductor stocks, I've added AMD, TSM, and ARM. When we compare their charts, you can see that NVIDIA went up 400% from the time this chart started. Others are struggling to keep up. They're just not as good as NVIDIA. So every investor had put their money in NVIDIA. And that's one way to make money in the stock market. You want to find a strong sector because 80% of the biggest moves come from sector moves. But you always want to be in the strongest stock in the sector. As you have seen, NVIDIA had done 400%, but the second best stock in that same industry had done 100%. So that is a very huge difference. Instead of making $50,000, you would have made only $10,000 if you chose the wrong stock. So choosing the best stock is always important. But that being said, even the best stocks can have some scary signals. So what are we seeing? What we're saying is that you see when the price was going up and running up, volume was increasing. It was on huge volume. This is a very good sign, right? This second rally had big volume, but the average volume started to decrease. And now this last rally is what is really scary, right? What we are saying is that the price is increasing, but the price looks like it is struggling to increase. When the stock is going up in price, you want to see the price action moving very easily. So you can see that in these previous 2 uptrends. But in this uptrend, it seems like it is struggling, as you can see. Not only that, the price is going up, but you can see the average volume is going down. And this means that there are less people participating in this market, and it could be due for a bigger correction. Now, of course, as technical analysts, we never really know the future, but we can just deduce what might happen. And so I would say, as an investor, as a trader, this is not a good time to start a position. But also, there's not a lot of bad signs if you're already holding the stock to sell it. So I would say if you already have the stock, keep holding it. If you don't have it, please don't buy it because the technical patterns are just not there. You see, it breaks out to all-time highs, but there is no volume. When it's breaking out to all-time highs, you want to see volume, right? Because stocks on all-time highs are great. So let's look at the relative strength. The relative strength is still looking good, so it's still stronger than a lot of the market. If we look at the relative strength indicator, the RSI, we can see that it also seems to be failing under the moving average of the RSI. So I add color codes to in the RSI. So green means that it's going up, red means that the averages are going down. So whenever you see a stock failing under the red averages on the relative strength indicator, that's also a very strong negative sign, and it's failing around the 60 value. So let's see what happens. I think there might be a correction. I'm not saying it's going to crash, but I do feel like there's likely to be a correction before it can really move up. If you like this content, hit the like button, subscribe to the channel for more videos like this. May the markets be with you.